What does commercial truck insurance cost? Insurance companies use many rating factors to calculate a trucker's insurance cost, and each can have a big influence on their premium. It's not uncommon for one trucker to pay $8,500 annually and another to pay $14,000 annually, depending on how certain factors affect their rate. So what are they? Here are 7 primary rating factors that can influence your truck insurance cost. Number 1, U.S. DOT authority. Leasing to a company is much cheaper than running under your own authority because leasing companies typically cover their drivers' primary liability exposure while their drivers are under dispatch. These drivers often need to carry non-truck or bobtail coverage to fill the gaps, but it's less expensive than the primary liability. Also, your U.S. DOT operating history can be a factor if you're working under your own authority. Any violation could put you at risk for a higher rate. Number 2, contractual requirements. The FMCSA generally mandates a minimum liability limit of $750,000 CSL or $1 million CSL for truckers who need a federal filing. This is much higher than most state minimum limits, meaning those drivers can expect to pay more. And did you know what CSL stands for? It stands for Combined Single Limit. It's the maximum amount your insurance company will pay for the combination of bodily injury and property damage per incident. Certain contracts require that you carry added coverages such as motor truck cargo, physical damage, or trailer interchange, which will also increase your truck insurance rate. Number 3, cargo. Commercial truck insurance costs are greatly affected by the type of cargo you haul. Some cargo is just riskier to transport than others. For example, an accident involving a truck transporting heavy farm equipment will likely cause more injury or damage than a truck carrying fresh produce. When getting a quote, it's very important to accurately and completely disclose the types of cargo you'll be transporting to minimize the risk of having a claim denied. Number 4, operating radius. Truckers with a large operating radius typically have an increased risk due to longer drive times between stops and more route options. A semi-truck driver who travels regionally will usually pay more than a driver whose routes are local. Number 5, vehicle type. A large semi will generally have a higher commercial truck insurance cost than a smaller pickup truck carrying the same type of product because of its potential to cause more damage in an accident. It's also typical for newer vehicles to be rated higher because they're costlier to repair or replace than older vehicles. Number 6, driving history. Accidents and violations have a higher impact on a commercial truck policy than your typical auto policy because large, heavy vehicles transporting bulk levels of cargo can cause a lot more damage. A minor speeding ticket on a trucker's driving record could cause a drastic increase to their insurance costs. Keeping your driving record free of accidents and violations could save you hundreds, or in some cases thousands of dollars on a truck policy. And number 7, location. Commercial truck insurance rates vary by state, so you can expect to pay more just because you operate in states with higher rates. Any questions? Give us a call. Maybe we can help.